Oil markets slipped after climbing to three-month highs this week on hopes for an extension to a massive output cut by major producers Saudi Arabia and Russia. Stock markets rose sharply, building on recent strong gains, bolstered by further easing of coronavirus lockdown measures and signs that economies could be past the worst of the coronavirus. For more on this, we're now joined by Ricus Reeders, Wealth Manager at PSG. A very good afternoon to you, sir. Thank you very much for joining us here on SA Today.
Good afternoon.
As a start, the rand has lost momentum after some gains from levels of 19 to 17 to the dollar. At what level can we expect to see the rand in the coming months?
Gosh, that's a hugely problematic question. I think the rand, as with a lot of other risk assets, is oscillating between people either being very despondent about what's happening with, as far as the pandemic is concerned, and then there's glimmers of hope and the whole situation reverses. So we've seen an 8-day rally in the rand that came to a stop yesterday, and it's obviously going to lose a little bit more, I would imagine, in the next week or so, because there is a fear globally, specifically starting in the US, where there seems to be a pickup in the amount of new epidemic cases coming in, and that is putting strain on things like emerging market currencies, of which the rand is one.
Yeah. Mr. Reeders, is gold likely to hold up, or are investors taking profits to invest elsewhere?
It is considered a safe haven asset, and we also saw that happening. The price of gold going up about $25 in 2 days. But the problem is, when there's a lot of negative sentiment, basically all assets get sold off in order, in order to get into cash. People feel safe when they have cash, and unfortunately, that's what happens with gold as well. It will probably hold its levels better than something like the rand, for example, which is quite a risky asset. But when people get negative and sell down, they will sell anything.
Yeah, let's talk about Brent crude oil. Price is sitting at $35. Last I checked about a few minutes ago. Is it going over $40 mark soon? And what would that mean?
I think with data that's coming from the United States over the past 2 or 3 days, looking at their oil and crude oil and gasoline inventories, which all came in higher than expected. In other words, there's no shortage of oil in global markets. And the feeling specifically also amongst investors looking at what the Federal Reserve said about the American economy going forward for the rest of the year, there's doubt that we are going to see a sustainable and very strong recovery, not only in the US economy, but also in the global economy. And that means that there's going to be less of a demand for oil. So obviously oil prices will remain volatile as the producers argue with whether they should cut production or not cut production, or whether they actually say they're going to cut production and don't. So there's going to be volatility, but in the end, if you've got a global economy that's not growing, there's a less demand for oil. And it might spike, but I can't see a sustained demand for oil coming into the market over the next 6 to 8 months.
All right, so, and just in closing, as we wrap up our conversation, what internal and external factors have determined the performance of the JSE this week? And can we, even hazard a guess as to what performance will be, going forward?
I wouldn't want to forecast. I don't ever forecast, because trying to have a single data point in an environment which is in essence unforecastable just opens you up for error. But certainly over the past week, there's been a bit of back into what we call SA Inc. stocks, in other words, companies that have their business inside South Africa. And that was going well up until about Wednesday of this week. And as we saw yesterday, it was a risk-off movement in global markets, and in turn, the old favourites of the past few months, things like Naspers and Anheuser-Busch. In other words, companies that are just listed in South Africa without actually doing their main business in South Africa being favoured.
All right. Thank you very much for giving us your time. That's Market Wrap, and Ricus Reeders joining us there, giving us his insight, wealth manager at PSG. Thank you for your time, sir.